Hello, everyone. Welcome to the market update for Wednesday, January the 13th. Apologize for having to postpone the market update a day. I woke up yesterday with a pretty bad migraine. I get really bad ones about 4 or 5 times a year, and I guess I was due for one. I hadn't had one for a little while. If you've dealt with migraines before, you know exactly how debilitating they can be. So I apologize for that, but back to normal today. So let's get started with the market update, and then we'll have our stock-specific class tomorrow. Now, the training for today, we're going to go over the Muscle 5 approach and the Muscle 10 approach. There's 2 different types of uses of the system. Very simple approach to money management and to kind of operating a basic trading system. And I'll show you how to go through that in our training today. Now, to begin with, let's go through and do our market update. As far as the direction alerts are concerned, we're starting to get into an area that's starting to concern me a little bit. Momentum is in the extreme range, and I talk about this all the time, that just because you're in the extreme range doesn't necessarily mean that you're going to get a pullback immediately. But when you combine it with some other things that we'll be looking at here, we're starting to get in an area where we could be due for a little bit of a pullback. Maybe not anything major, possibly just kind of what we saw back in October and or September, and then later in October. We'll look at that when we pull up the charts of the S&P here in just a second. But we're in the extreme on the momentum. Now, when we move down and go to the breadth's not in extreme area yet, so it is possible that we can continue to move up higher here in the near term. But we're definitely going to keep an eye on that, because if this starts to move into the extreme and then we get sentiment moving into the extreme. Now, sentiment's lagging a little bit further. And sentiment rarely gets into the extreme complacency range. So if you do get into that, you really have to be concerned. Anytime the sentiment gets into the extreme range, I start to get a little concerned of a pullback, just because it doesn't get in there very often. But you combine that with the others getting into the extreme range, and it becomes a little worrisome. Now we go over to the buy-sell ratios. These had come closer together, but they've expanded back out again. So we are getting a little bit of an extreme area here we are in an extreme area on the buy-sell ratios. It means that there's far more stocks that have buy signals right now than sell signals. You say, well, that's supposed to be great. Well, when it gets to these extreme levels, usually it means you're getting near a top. Remember, one thing to always remember about, and I'll talk about this sometime, do a class on sentiment. This is where you have to learn to think as a contrarian. But when the market feels the most bullish, when it feels one thing I always say is when it feels like it's safe to get in, when it feels like, man, there's no way I'm going to lose money. I mean, everybody thinks the market's, everyone on TV thinks the market's going higher. Everyone I talk to thinks the market's going higher. When you get in that environment where it feels like it's safe to get in, it usually isn't. Those are signs of a top. If you study history, those extreme type of conditions, when everyone's bullish, that's usually happens right before we get a major pullback. And the opposite is true. When everyone feels like the market, how much further is the market going to go down? This thing's never going to go back up, and you think it's going to drop another, the Dow's going to drop another 1,000 points. That's usually when you're at a bottom. That's usually when you need to start buying. There's an old Wall Street phrase that says you want to buy when there's blood on the street. And these are all simplistic phrases. It's sometimes difficult to know, how extreme is extreme, because especially the bullishness. We've been in a pretty extreme bullish environment for quite a while. So, even though we're extremely bullish, can we get even more bullish? And the answer to that is yeah. Sometimes you get these rare moments. Last time was that I remember was back in the internet bubble of 2000, where it lasted for months, where it was just extreme. It was just ridiculous that the market was still going higher with the overbought condition it was in. But that's why we're not going to just get out of things just because the market environment feels very bullish. But when you combine it with indicators that are indicating overbought conditions or stretched conditions, then you know that you got to pay attention and be prepared. And there's a number of decisions you can make based on that. It could be that you're just not buying anything new. You're just going to hold the ones you have, and as they start to roll over, you'll start to get out of those, go to cash. Maybe you tighten up trailing stops a little bit closer. Maybe you do just start getting out and taking profits and go into cash. If it really starts to get extreme, sometimes I'll just get out and wait for the next pullback. I might miss the last 300 points or so move or what have you, but I at least protect myself from when things drop, because markets tend to drop a lot faster than they rise. I'll show you the pullback back in September and October, and you'll see exactly what I'm talking about. And so sometimes it's not worth it trying to grab that little extra when you could avoid the big drop, the big sudden drop, because we always think sometimes things will start selling off, and then we'll be able to get out then. We'll know to get out at that point. But when they fall so fast, you could wipe out 3 weeks of rally in one day, and so that's the danger you're in when these pullbacks start to happen. But this is getting a little stretched here. And then one thing that really caught my eye the last couple of days is the sentiment indicator here has gone into that extreme range. It's gone beyond it, and then it's come back down a little bit today. But we're definitely in this extreme range, and you'll notice that a lot of times when we get in the extreme area here, we start getting some of these pullbacks that take place and start hitting that extreme area there. So that's something that really kind of made me a little bit concerned. There was that moving up, and it moved up there pretty quick, moved up to that extreme range pretty quick. So we'll keep an eye on that as well. If we take a look at the individual charts here, let's take a look at the S&P 500. This is what I was talking about. So this was back in September. So you can see this big down day that happened in September. It wiped out 1, 2, 3, 4, 5, 6, 7 trading days. So about that whole week of trading, and well, actually more than a week, because there's only 5 trading days in a trading week. Well, about a week and a half of trading in one day, and so and then go beyond that. The next day it dropped, and the third day it dropped. So in 3 days you wiped out, probably 3 weeks of trading in 3 days. So if you think you'll get a warning, a lot of times it doesn't always happen. But this is the type of pullback I think that would be healthy for the market. These have happened a couple times here. This one happened in October. We haven't had one for quite a while. We've kind of stretched things out here, and the market is looking a little tired as well. We went through, last week I was talking about having this little consolidation right here we've had. I thought if we break out of that, this thing could really start running again. And it did for a couple of days last week. Right at the end of the week, we had, pretty much all week we had a nice little rally from down in here, broke out, and had a couple of days where we had a pretty decent move. But then since then, we're moving sideways again. So what that's telling me is it's telling me that there's still buyers there, but the buyers are drying up a little bit. And the mentality I'm thinking of here amongst traders is that they're a lot of these stocks are in these strong trends, and they don't feel comfortable buying into them at these levels. They want to see a pullback where they feel like they're buying in at a cheaper price. You're getting a little bit of a discount, And this is human nature. I mean, if you pay attention to yourself at a store, I mean, how often have you been in a store and seen something, whatever it is, something that you keep track of as far as prices, or you're aware of as far as prices? And how many times you said, boy, that's pretty expensive at this store. You know, I saw an ad that this was, you know, $20 cheaper over at this store or something like that. And so what do? You go buy it at the other store, or you wait until it goes on sale because you want to get, you wouldn't mind getting the product, but you'd like to get it at a better price. You want to feel like you got a good deal on it. And happens in the stock market all the time. In fact, it happens all day long in the stock market, where these things happen, and all these traders are making these decisions. But when you start to see the market get a little sluggish like this, it's usually, when it gets sluggish but it's not dropping in a major way, it's usually a sign that that the buyers are starting to you know, not feel comfortable buying in at the levels there, and that usually precedes a pullback. And then what can happen is you get that pullback, and then buyers come right back in. We saw that happen right here. You get this pullback, and then it just shot up again. And this is what's ironic and kind of crazy about all this, is that, you know, up here, obviously buyers were not wanting to push things higher. It drops, and then buyers come back in, and then it blows right past that level where they weren't, you know, they weren't comfortable buying, continuing their buying at that level. And that's why sometimes these selloffs can jumpstart rallies. But what we want to try to do is see if we can pay attention to some of these warning signs so that we can get out, maybe not of all our positions, but a majority of them, to where we're not all in on these drops, so we don't get hammered too bad on these drops. And then we can jump back in near these bottoms where we can ride the move back up. And we're not going to be able to do that perfectly. I can't get out exactly right here and then get in exactly down here. But if you can, you know, get out as it's maybe starting to drop, and then get in as it's starting to rally back up, you can get make a little bit of extra money because you're positioned a little bit better. And that all comes down to recognizing some of these warning signs that show up ahead of some of these moves. So that's what I'm a little bit concerned with. I also told you to keep an eye on the Russell 2000, because that's been the leadership here. Before we do that, though, let's take a look at the Dow. The fact that we're still kind of moving a little sideways here indicates to me that we still should have some movement higher. I still think this week we could continue to move higher, maybe through the end of the week. Next week is where I'm starting to get a little concerned, though, that with these signals that are flashing here. Also you can also see up here, both the Dow and the S&P are in this extreme reversal risk range. Now, again, it can go all the way to the right side of that range. It doesn't have to mean that once it gets to that range, it's going to pull back immediately. Here's the S&P as well, SPY. But again, you start combining this with what we just looked at earlier with some of those indicators that are also showing getting into those extreme ranges, and we're starting to get a lot of these line up, and we'll see. You know, sometimes the market shakes it off and continues to move higher, but it's spooky sometimes when we start seeing these warning signs and how, you know, a few days later we get a decent pullback or something like that. And makes us feel really smart when that happens, when all we're doing is just reading indicators that are designed to look for some of that stuff. But we'll see what happens here with this one here, these signals that we're seeing here. NASDAQ 100 isn't in the extreme range. Maybe it might take a little bit of a catch-up rally in the NASDAQ for it to get in that extreme range before we get a pullback. That could happen quickly. I mean, you could get a really big day. We're close enough where you get a really big up day in the NASDAQ 100. You could get right into that extreme box there pretty quick. And then the Russell 2000, I said keep an eye on this one because this one's been the leadership. And, you know, so today we have a market that's where the other indexes are up, but the Russell 2000 is down. And so that concerns me a little bit. Is this starting to roll over here? Again, keep an eye on this, because if we start to see a down day and the Russell is down a larger percent or a larger amount percent-wise than the rest of the indexes, that would concern me a little bit. That maybe we're getting about to have a little bit bigger pullback. And sometimes you only get a little pullback like this, and then it comes right back again too. So sometimes it's hard to tell when you get the big pullbacks or just the smaller pullbacks. All right, so let's go through the other charts as well. Bonds are starting to move up a little bit off of the low. Now, we've talked about how bonds have been in this downtrend, and every time they start to rally back up, we look for them to go to a higher high, and they haven't been able to do that. Here we had kind of an equal low, but we broke right through that last week. And now today's the first up day we've had in almost a couple weeks here in bonds. In order to say that the trend is reversing, you'd like to see it get above this previous lower high right here. If it can go to a higher high, that's quite a ways away. But that would also be a big enough move. If it were to have a big enough move where it's going up a few days in a row and break to a higher high, probably a good chance at that point that bonds are reversing. And they've been, they've been in this downtrend for a while, so they're kind of in a little bit more of an oversold range there, where they're probably due for a little bit of a decent rally. You see they're in this extreme, the opposite here, where they're in the extreme oversold area. And so they're probably, it wouldn't be surprising to see bonds start trending up here pretty soon. And oftentimes, when money comes out of the market, it goes into bonds. Usually professional traders are doing this. The average trader isn't usually moving money back and forth. But the big professionals usually do this. Where they go when they're worried that they're not going to make, where they think the market's going to pull back, they still want to get a return. They don't want to, obviously they'll get a bigger return in the market because the bond returns are very small in comparison. But if they think a bigger sell-off is taking place, they'll start pulling their money out of the market and putting it into bonds, and that's a clue. Sometimes you can see if the market's getting stretched, and you start to see bonds rally. And especially when the market starts dropping, if we start seeing the market have a down day and you're starting to see bonds shoot up in a big way, then that's usually kind of a warning sign that maybe a bigger pullback's underway as those professional traders are moving money over into bonds. They don't have to. It doesn't have to have that inverse relationship, though. As you can see, the market was moving higher during this whole phase, and bonds were continuing to go lower. But usually that's a lot of times when the market starts selling off, I like to look at what the bond market's doing to see if it's reflecting inverse relationship, and that can usually be a sign that maybe that those professional traders are getting maybe a little bit more worried about the market selling off a little bit more. So we'll keep an eye on that and see if we see bonds start trending up a little bit. Gold, now gold we were looking at last update that we were close to going to a higher high right here, and we had a nice old short-term uptrend, higher highs, higher lows through here, but it failed to go to that higher high from this larger downtrend here, and it just dropped. And then the last few days, it's been just kind of moving. It's moved up a little bit, but it's almost a little bit more choppy, a little bit more sideways here. So it's looking to me like there might be more downside here on gold. And I know that's hard to believe with the people talking about inflation, but that's kind of what the chart's showing me right now, that maybe gold might have another move lower here. That's going to be a key area here to keep an eye on. Now that we've kind of touched it a couple of times here, is if it could break out above there, then obviously it'd be a lot more bullish on gold. It would look a lot more like it's reversing trend, and especially if it rallies up from here, you'd have a pretty distinct higher low right here that you could kind of focus on, and if it breaks out above here, you've got a new higher high that should be acting more like an uptrend at that point. Oil still continues to trend higher, and there was news out today that the Saudis were cutting their their oil supply, which should continue to push prices higher. However, at some point, obviously, those oil cartels, the greed will kick in, and they'll start pumping as much as they can when those prices are up a little bit higher, and that tends to, if the demand's not there to meet that extra supply, that causes those prices to drop pretty quick too. So we'll see if that ends up happening sometime soon. But the trend is up, and those oil stocks have been outperforming the market lately as well. All right, and then the dollar. We've seen the dollar start moving up a little bit. It was kind of in an extreme oversold condition as well. Keeping an eye on this area right here, because here was the previous lower high. It went to a lower low right there. It came up to that area, didn't break above it, pulled back from it a little bit here. If it can get above here, that could signal a trend reversal in the dollar. And it would also give you, if it can rally up here in the next day or two, give you a higher low as well. So you get higher low, higher high, and it could possibly be a little bit of a trend reversal. It's already kind of broken this trend line of the downtrend. If you draw this through, it broke that on this move right through here. You're just waiting for this to go to a higher high to kind of confirm that trend reversal, that potential trend reversal. And then lastly, we'll look at the VIX. Now the VIX is come back down. It started to spike up a little bit on Monday. But it's kind of come right back down again. It is at a pretty low level right here. One thing I'm really kind of trying to pay attention to is do we have, with the market looking like it could still rally for a couple more days, maybe through the end of the week, and maybe beyond that, but just looking at it real near term. With all the other extreme levels and overbought conditions we're looking at, one thing if we start to see some of these have some of these up days and the VIX is moving up, so it's moving the same direction as the market, that'd be a really big warning sign that a sell-off is about to happen. Because what that would show me is that those professional traders are still buying, but they're buying protection. They're buying insurance. They're buying those protective puts, which means they're not confidently buying. And it's probably it. And the reason why that might show up is they're seeing the same things we are. I mean, they're seeing that we're in a little bit of a stretched condition here, and so they might still want to be buying to they don't necessarily want to assume that they know when a sell-off's going to happen, but they might be buying it as the stocks as well as buying those protective puts just in case, and that'll show up on the VIX if that starts to happen, and we start to see the VIX move up and the market move up. And boy, if I saw that, look out, because we're probably within days of a day or two of a pretty decent pullback. All right. Real quickly here, let's go look at a couple of stocks. We'll do more tomorrow with the stock-specific class here. But if we go to sectors, there's a lot in the retail sector. And retail, it should be that retail's at the top of the list here. It overtook the computer technology sector. Some of these we've talked about a few times. Kirkland's I still like, and it still has a hold. Jumia right here, JMIA is one I really like. 98 strength break, and it just went to a buy today with today's move. So I liked it before on this little pullback right here. We're just waiting for it to go back to a buy signal, and it looks like it hit that buy signal today. And this one looks like it has a lot of, it looks like it's a nice strong uptrend, still has a lot of nice upside potential there to it. Another one I like in this sector is this FTCH, 97 strength rank, so not quite the 98, but I like the chart pattern along with it. Again, notice how you've got the nice strong uptrend right here, and then it's kind of drifting more sideways. It's pulling back a little bit, but it's more choppy, more sideways. That's usually a pretty healthy correction. And, you know, if it can go back to a buy signal here, and especially if we go back to a buy signal and break out to a new high, that thing could really start taking off again. So this is one you can kind of keep an eye on. All right, let's get into our training for today. I'm going to switch this back to candlesticks for now. And this is it's kind of a, I guess I classify it as a money management approach, but it's kind of a whole system approach. You know, how to find some trades. You know, what's a real simple technique. I don't have a lot of time. You know, I've got a lot of money. I don't have a lot of time. Or even if you don't have a ton of money, you can kind of scale this to whatever size account you have. But you're looking for just a real simplistic approach. You don't want to spend hours looking at charts. You just want to you know, buy what's hot, what's good, what is more likely to go up. And this approach is it's basically the same concept here, but there's a couple ways you can go about it. One is called the Muscle 5 approach, and the other is the Muscle 10 approach. And the only difference is you're either only getting you're only picking 5 stocks, you're picking 10 stocks. And you can allocate. And the benefit of maybe doing a Muscle 10 is that you got a little bit more diversification with it. You got 10 stocks instead of 5. You know, that way one stock has a bad day. Well, 1 in 5 could have a bigger effect on one stock has a bad day out of 5 could have a bigger impact on your portfolio than 1 out of 10. Usually, at least that would be the concept. But so there's just some different approaches you can take. Now, what you're going to do is you're going to go into your muscle stock scans here, right here, up at the top there, and you're going to it'll default to the muscle stock scan, and we'll do some trainings on some of these other scans as well, so you kind of, you know, understand them a little bit better. But for now, for this approach, this is what you would use for this approach, or although you could modify the approach a little bit, which I'll show you here in just a second, but it'll default to the muscle stock scan. Now, the algorithm that this scan is looking for are the stocks that are outperforming everyone else, basically. You know, they're now the reason why some people don't always like to buy these stocks sometimes, and I usually have a little bit of a different approach. But again, I'm reading charts. I know how to read price action. I like to look for stocks that are coming out of a pullback or a consolidation or breaking out. These stocks they're already performing. If we look at the first stock right here, this stock should show a clear uptrend when we pull it up here. There it is right there. It's a clear uptrend. If we go to the signals, it's at a buy signal for a while. It's 100 strength rank. So this is the top of the top. Okay. But the idea here in this more simplified approach is that those are the stocks you want to be in. Those are the stocks that are outperforming everybody else. They can stay in these strong trends. When stocks get in these really strong moves, they can stay in them for a long time. I mean, you could have thought that the stock was stretched back in here after it went from 48 cents to $2 in a month. You know, quadrupled in value in 1 month. Boy, that's really stretched overbought. But then it's gone up to, you know, $5-6 or so since then. So you look at this right now and say, boy, this thing is really stretched. It's gone from $1 up to $6. Well, who's to say this thing can't go from $6 to $20? You know, and you're just looking for the stocks that are at the top of the list here, and you want to get in them. Now, the idea is, if we go back to watch list, or excuse me, the muscle stocks here. Now we're gonna assume we have a $100,000 account. Obviously, you could scale this to whatever size account you're dealing with, and you could use the same concept. You could have a $10,000 account and implement the same idea. But we're going to pick on the Muscle 5 approach. We're going to pick the top 5 stocks. Now I'm going to modify this a little bit because this Blink Charging Company, this one right here, BLNKW, is basically the same. It's going to trade the same as that. It's just another. It's kind of like the Google A and B share. Hold on just a second. And so it's going to be moving pretty much the same, although the prices are a little bit different. And that's the same. We look at the Google A and B share. The prices will be slightly different, but it's going to move about the same. Both of them are going to go up when Google goes up, or they're going to go down when Google goes down. So the main one here is this BLNK. That's the one I'll go ahead and choose. I'll kind of cross that one out, and we'll go to the next few stocks here. So we're gonna take these 5 stocks. And now I've got a $100,000 account. So what I'm going to do is I'm going to put $20,000 on each trade. So I'm going to keep it equal. And again, the math, how many shares do I buy? Well, again, if we look at the first one there, it's a $6.11 stock. I mean, the basic math there, I'm not trying to insult your intelligence, but there might be someone out there that doesn't know how to do this. You just simply take $20,000, divide it by that share price of $6.11, and you get 3,273 shares. And so that's how many shares I'm going to buy. And you do that with each of these. You get it. So each of the positions is going to have an equal price amount that you're getting into. And then it's a real simple approach. You get in, and then your exit strategy is when it goes to a sell signal. And I'll show you how you can in your portfolio where you can set up an alert it'll email you when it goes to a sell signal, so you know when to get out. Or you can just watch it every day, check on it every day. And then once you get out of that stock, or when you get out of any of the stocks, because they're not always going to get out at the same time, obviously. But once you get a sell signal, you're going to go back to that muscle stock scan, and you're going to pick the next highest one that you're not in. So if I got a sell signal on this one tomorrow, I'd go down the list and I'd buy the next one on the list, which is GRWG, and I'd go buy that one and get into that stock. And so you're going to focus on the outperforming stocks right here. Now, obviously, not all of them are going to keep going up, and sometimes what happens is this is that would be the simplistic approach. Okay. Obviously, could you factor in other things? Yes. We've just got done talking about the market feeling like it's at a top or getting near a top. You could wait, for the next sell-off to take place. Probably wouldn't be a bad idea to do that if you're anxious to implement this approach, because we're probably due for a little bit of a pullback in the market. And you wouldn't want to be getting in all in at the top. But this will work very well if you get a pretty decent pullback, because if things come back a little bit, you immediately go find the top performing stocks. Which stocks have been maybe going up or holding up with the market selling off. And many of those stocks could continue to go higher after they can continue to go higher after or as the market is starting to rebound and come back. Okay. All right. So how do I go ahead and buy these? Well, first of all, you go into my portfolio right here, and you can set up if you click on add a tab right here. You could name your thing. I named it Muscle 5 Example. Name it and then put in whatever your starting cash is going to be. We put in 100,000, and then save it. And then when you go to your muscle stock scan here, if you click on IEAWW, the top one right here, it'll pull up the chart. So you can take a look at the chart. And then if you go over here to this blue button right here, and if you put your mouse over it, it'll show you. It'll say my portfolio or add to portfolio here. You could also add the stock to a watch list. But if you add to your portfolio right here, click on that. It'll ask you what portfolio. If you got different portfolios, we're gonna go to the Muscle 5 Example here. And it shows 100,000 in that account. You could, and then whatever, maybe you've got a $20,000 account or something like that. You put that in. All right, so it's asking me how many shares am I going to buy of that stock. We calculated 3,273. And you're not using a stop. Again, we're just going to, when it goes to a sell is when our stop. That's when we're getting out. And then go ahead and hit purchase down here at the bottom. And it should put that in the portfolio. We'll look at the whole portfolio here in just a second. Let's go buy our 5 out of this list here. So go back to muscle stocks. We're going to look at TTCFW. 20,000 that we want to put into that. Our share price is $13.90. So 1,438 shares. So let's click on the. You don't even have to look at the chart. You can go right to the. Well, let's look at the chart though, because we want to take a look at. See, this one's really nice because it's coming out of a consolidation. It's starting to break out again. Had that nice little run up right here. It's consolidated. And by the way, those of you that are learning how to read charts and all that kind of stuff, you don't have to necessarily take the top 5 in the list. You could be a little bit more selective where you're looking at maybe for stocks that are in the top, but they're also maybe coming out of a consolidation, or they're just breaking out of a cup with handle pattern or something like that. You can always add these other things in there to maybe increase your probabilities a little bit through your education. So let's go ahead and add this one in. Do our Muscle 5 Example. Number of shares, 1,438. And hit purchase. All right, I am going to just skip and just do the. Well, actually, let's look at this chart. I like this Blake Charging Company. This one I think has a lot of upside. If you don't know much about this stock, what they're doing is they're building the infrastructure for charging stations. Just like gas stations. You have all these electric cars coming on the market. We're going to have charging stations everywhere. This is one of the leading companies they're building that infrastructure. So this is going to be probably a real big stock for a long time. but they also have to have a lot of capital up front to pay for building that infrastructure. So, but this should be one of those companies that's going to be a pretty common name down the road. All right, so let's go ahead and add this one. 20,000 divided by $51.11. 391 shares. All right, and then so we have 1, 2, 3, 2 more, 4, 5. Let's quickly do this one here. 20,000 divided by 2615. 764 shares. And then lastly, this BNGOW. 20,000 divided by $3.75. That's going to be a lot of shares. 5,333. All right, so we did our 5. I'm not going to go through the muscle 10. The muscle 10 is you're going to do, what you would do there is if you had a $100,000 account, you're going to do 10 trades with 10,000 in each trade. Same, you're just expanding it. So now again, the benefit there you're spreading out your risk a little bit more, and your potential reward. You have a better shot of capturing a stock that's going to double or triple in value. If you have more stocks out there. So that's kind of the concept behind that approach. Now, if you go under my portfolio here, it'll show. A little pie chart here shows our different trades. We're pretty much fully invested. I think a couple of those, the price was a little bit. Prices. Well, actually, we're pretty much fully in. We've got only $196 available, so we're pretty much all in there. And now what you can do is you can go in and you could now you want to simplify this here. I don't want to have to watch this all day long or whatever. Can I set up an alert to tell me when it goes to a sell signal? And the answer to that is yes. You go over here showing your breakdown. We're down a bit on some of these that they dropped a little bit from when we got in, but you can click this little alert box right here. And it'll say signal changes from buy to hold. We want to go from buy to sell. So when the signal goes from buy to sell, and then click this box right here, I want it to email me. Now it'll use the email that you use with TradersPro. So just be aware of that, and then just hit save, and it'll send you an email when it goes to sell. Now you got to be careful with these alerts, because I've done this before. They're great, but you want to be really selective on your alerts. Otherwise, you're going to get bombarded with emails all day long, especially if you start setting up alerts to get in, because you can build a watch list, and I'll show you how to use watch lists later on too. But today we're looking at FTCH, for instance. And what if I want to email me when that goes back to buy? So I'm waiting for it to go back to buy. Well, I can put this in a watch list. I'll go to my Dow watch list here. So let's go to the Dow watch list here. And I can put it in my watch list in, like, Apple, for instance. Apple has a hold right now. Yeah, it's a whole. Let's say I want to know when Apple goes back to a buy signal there. So I go back to I can go to my watch list, and over on the far right here, you can see where it says alert. You can set up an alert. Alert me when Apple goes from hold to buy, and then hit save, and it'll let me know. Okay. But you can imagine, though, if I set up alerts on 50 stocks, I'm going to get bombarded with emails. And then what happens is if you're like me, you don't like to go through a ton of emails. You tend to skip over them, or you tend to ignore some of them, and you might miss something. Especially if you get alerts for getting in and getting out of all kinds of stuff, it could really, it's just too much. So you really want to be selective on what you get alerted to. But obviously, to get out of your position, you're not going to be doing that very often, especially with 10 positions or 5 positions. So let's go to that muscle 5 example here. So you're so it's not going to happen very often. So you should be fine. And even with getting in, you obviously, with all the stocks we go over in the stock specific class, I know not everyone's going to be trading every single one of those we go over. We go over a ton in each class, and we go over 3 or 4 or so in each class. We have a couple classes a week. I get it that not everyone's going to be getting into every single one of those positions unless you have a multi-million-dollar account. But that's what you could do, is with the ones you do want to get into and you want to wait for them to go back to a buy signal, you could set up that alert for it to email you when that happens. Okay. All right, so that's the Muscle 5 approach. And like I said, the Muscle 10 is you're just doing 10 stocks with whatever, you're just allocating it equally, though. So, if I've got a $20,000 account and I want to do a Muscle 10 approach, then I'd have $2,000 in each trade, basically. Okay. So it's a real simple approach. And again, hopefully the concept makes sense. You're looking for the winners. You're looking for the outperformers. And you're going to ride those until they give you that sell signal to get out. Like I said, you could use the same approach, but use it with the 98 strength rank, like we look for with those stock specific those ones we look at each week, where you're going to get in when they go back to a buy signal, and then you could get out when they go to a sell signal. The problem, though, that you'll run into is that not all of those are going to be the top performers. We're looking at 98 strength rank, and there's a lot more stocks when we get down to that 98 strength rank. But anyway, it's just a real simple approach you could use. You can keep track of it here with the software. And by the way, when you're ready to sell, you get the sell signal. You're just going to go over here to the sell button here. And it'll sell you out of the position. All right. Thanks, everyone. Have a great week. We'll see you actually tomorrow for the stock specific class. We'll go over more of those individual trades. We'll check the market real quick too to see if it's flashing any other sell signals for us or warning signs that we might be pulling back soon. And we'll go over that tomorrow. Thanks, everyone. Bye now.